Good day traders, so this is Stefanos on behalf of Tixee, and in today's video we'll be reviewing the market for the week of 10th of January until the 14th. Remember, on a weekly basis we're running the weekly review video as well as the weekly outlook video, which obviously covers the following week. However, on today's video we'll be covering what happened during the past week with regards to any market related events. Now, before we actually get started, please note that all of the ideas discussed in this webinar are my own opinions and they do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, or either if you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, in today's video, the main focus for today is going to be the earnings report for the past week. Now, remember on the last week's video, we mentioned that the earnings season for the Q4 of 2021 was kicking off, and we had some major US banks reporting figure this past week. Now, the major banks that we spoke about were Citigroup and JP Morgan, both of which reported their numbers earlier today on Friday. Now, with Citigroup, shares fell more than 3% as the company reported quite a strong profit drop for the quarter. Its net income dropped by 26% due to an increase in expenses as it was cited by the company. Now, I will also pull up the chart of Citigroup in the meantime, so we can also have a look at the impact that the earnings report has on the stock at the time of the release. So the release took place and we can see that there was a major gap down with regards to the market. So the close, this was Thursday's close, so the 13th of January was Thursday, and we had the price closing right about $67.78. And then as the reports, the figures came in pre-market hours, we can see that the open was round about here, which was $66.93. So if I measure from the close of yesterday to the open of today, the price, we can see it dropped by nearly by 3.5%. Now, it did manage to claw its way back up towards the close, but obviously the overall sentiment in the pre-market hours and at the open was bearish, given the expectations and the outlook given by the earnings report. Secondly, like I said, we had JP Morgan. So in the meantime, I'm going to pull up the chart for JP Morgan as well. Now, JP Morgan's share fell double the amount that Citigroup shares fell, which was about 6%. They also cited a similar reason to Citigroup, which is basically the fact that they had higher than expected expenses. And adding to that, the company's CFO lowered the expectations and the outlook on the year, saying that he expects headwinds ahead. Now, he didn't specifically mention what kind of headwinds, but when obviously investors hear that kind of talk coming out of the CFO of the company, you can expect that we're going to be having some negative outlooks with regards to the share price on the present day. And we can clearly see this one. If we follow the same route as with Citigroup, we can see that this was Thursday's close, so January 13th. We can see that the price closed at around about 168.23, and at the open today, the price opened by more than 4% lower, and actually now it's trading even further down. So we can see on the day, it's 6% down on the day. Now, it went as low as close to 7%, but it just recovered a little bit of that to be around about minus 6.5%. So the key takeaway from this is that the earnings figures, they can present us with some very good trading opportunities. And like I said at the beginning of the video, we just pretty much started with the earnings season, and we're going to be having quite a number of big names reporting their numbers next week. Namely, it's going to be Netflix, Bank of America, and Goldman Sachs. So we do have a couple of more US major banks reporting numbers, and then we're going to be having Netflix as well, which is all names that are pretty good to pay attention to, given the trading volatility they could have during the day, depending on what kind of results they're going to be releasing. So this is pretty much with regards to stock. So yeah, just keep attention to the earnings season if it's something that you do like trading. Since we're just pretty much kicked off with it, we can expect there are going to be a number of more companies reporting their numbers. And it's going to be interesting to see what kind of movements we're going to be seeing in the markets for the next couple of weeks where they're going to be releasing figures. So this is with regards to stocks. Now we're just going to move into Forex. Now the US dollar, let me just pull up the, I can just pull up the dollar index in the meantime. So you can see we had a drop in the US dollar index throughout the period of this past week. The likely reason due to the weak inflation data. Now this is again something that we mentioned in the Outlook video of last week, that we were going to be having the inflation data being released for the US dollar this week. Now it did come out, and it's sitting at levels that have not been seen since 1982, which is the inflation number sitting at 7%. Now, just to give you an idea, the overall benchmark that economies aim to keep inflation at is around 2 to 3%, let's say. Again, this is not like a concrete number, but it's more like the benchmark that economies try to keep their inflation on. Now, 7%, as you can expect, is pretty much more than double than that. So this affected the US dollar quite negatively for the past week. And we can see here, if I just put the mouse over this candlestick, that the price drop was around about 0.6% throughout the week. Now, these can obviously present opportunities with currencies that are trading directly against the dollar. So for example, if I pull up the euro dollar, we can see that throughout the week it did enjoy a quite brief rally. But obviously, again, this is something that presents us with opportunities because you can expect some volatility in the markets if we see inflation data that has not been seen since 1982, and we've had quite a few movements to take advantage of. Now, on the technical side, we can see that the prices, this is the 8 period exponential moving average on the daily time frame, and this is a 21 period. Now if I switch this to one that is a little bit less sensitive, so I'll put the 50 period exponential moving average, you can see that the price broke above it, and it's right about retesting this 50 period moving average. And if we look, if I just plot the RSI as well, we can see that the RSI crossed above the 50 level, and it's looking towards the 70 areas, basically moving between the 50 and 70 level on the RSI. So we can also have a look at the pound dollar, which is not highly correlated with the euro dollar, but they do have some sort of correlation. And we can see that also the pound dollar, it enjoyed a brief rally throughout this week, and similarly to the euro dollar, it crossed above its 50 period exponential moving average, with the RSI also posting a reading above the 50 level, which is currently around about 54.2, and between the 54 and 70 area pretty much. So yeah, this is with regards to Forex. Again, it was, I wouldn't say a jam-packed eventful week, but we did have some events like the inflation data, which obviously shook up the markets quite a bit with regards to currencies trading with dollars, and we covered the movements between the euro dollar and the pound dollar. Now, obviously, this doesn't only affect, if the US dollar is seeing some strong movements, it's not just going to affect Forex. We're going to see this spilling into other markets as well. So if we look at gold in this case, for example, let me just remove these drawings. So as we know, the general tendency is that the gold and dollar, they have an inverse correlation. And since the dollar dropped throughout this week, we saw a pretty decent rise with regards to gold. If I just measure the movement, we can see that gold rallied more than 2%. So again, presenting with trading opportunities throughout the week if gold is something that you look into trading. And if we look at the 50 period exponential moving average, again, it's pretty much hovering just around this level. It's actually, the market has another, if I'm not mistaken, it has already closed. So you can expect that the market is going to probably open round about this area on Monday. Again, obviously this depends what's going to happen over the weekend as well. But we can see that it's pretty much right about at the 50 period exponential moving average, and with the RSI pretty much at the same level, which is the 50 level on the RSI scale as well. Now, something to also keep an eye on with regards to gold. Usually, if we have geopolitical tensions rising, we're going to be seeing likely that investors are going to be flocking away from riskier assets and into safe haven assets, of which gold is considered as one of them. So I don't know if you've heard about the situation between Russia and Ukraine, but we do have some tensions that people are saying that are likely due to rise in the next weeks to come. Now, whether that happens or not, it doesn't really matter, because if there's talks about geopolitical tensions in general, we can expect some further volatility taking place with regards to gold or any other commodities that are considered similar to gold to be a safe haven asset. So yeah, this is definitely something to watch out for. And lastly, we're going to be covering the US oil as well, crude oil specifically. Now, this week, the crude oil, it continued its advance. We can see it's actually it's enjoyed a quite decent rally of about 4 consecutive green weeks, where it actually rose between this period. If I measure from the open to the high, it rose about 20% within the past 4 weeks. So we also had the crude oil inventories on Wednesday, and they actually posted a significant drop compared to the expected figure with regards to the inventory supplies. The figure showed an expectation that inventories would decrease by as much as roughly 2 million barrels, when the actual figure showed a decrease of 4.5 million barrels. And if I switch to the daily time frame, we can see Wednesday was the 12th. So if I look at the 12th, we can see we had a pretty decent rise that could likely have come from the fact that we had the decrease, the more than expected decrease of the barrels with regards to crude oil inventories. Now, on the week itself, price rose by about 7%. If we just measure it, 6.5% more or less. And it's trading pretty much higher than the 50 period exponential moving average, and also towards, it's not yet, I wouldn't say it's at overbought levels, but we can see the reading here for the RSI is 64.07, so edging closer and closer to the 70 area mark. So yeah, this is pretty much with regards to the review of the markets for the past week of trading. I hope you enjoyed today's video, and I'll catch you guys in the next one. Until then, trade safe.